Good morning, everyone. Welcome to Admiral Markets webinar, where we take a look at strategy today on this Wednesday, the 16th of September. And we're going to be taking a look, of course, at Forex market technical analysis. And I think today, specifically on Camarilla in combination with the moving averages. So that will be the focus for today, I think. The strategy focus. Before we continue though and take a look at that topic, be aware that this webinar is intended for a global audience and may not be suitable for everyone. To find out more information about that, conditions, and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right. Just in case you are, and maybe perhaps here for the first time or second time, take a look at admiralmarkets.com. There's not only great education, I hope you agree, but also analytics provided, as you can see, and also at the homepage there's more information about MetaTrader 4 Supreme Edition with 56 additional features. So if you are looking for a broker or a better broker, take a look at Admiral Markets, and if you're already with Admiral Markets, you can use these sections for more info, up-to-date info on the markets. Alrighty, so today we're going to take a look at strategy, as I already said. Before I do that, I'm going to take a quick look at the calendar. Tomorrow, of course, is a big event, and it's keeping the markets in suspense already for months, perhaps already for years, in fact, because the last rate hike, as I said yesterday, I think is already dating back to 9 years ago in the meantime, and we're almost reaching a decade anniversary, in fact, which is, I mean, historically quite a unique event that first of all, I don't think we've ever had such low levels, and we've certainly never had such low levels for such a long time. Looking back at the history graph, this has in all ways a unique kind of part of history. So, how will that evolve? It's difficult to say, obviously, because it's unique. It's the first time when we look at financial markets, we're looking at historical patterns. Well, if there is no past kind of example, it's a bit difficult. I mean, you can make comparisons perhaps to other periods of times. I've seen references to the end of the 30s, 1930s, where the rate hike was increased too soon. That was something that Admiral Markets external communication advisor or contact, Darren Sinden, he also does the New York show, the crossover show. You can find that on YouTube, and he talks about the ins and outs of mergers and US data, etc. So if you subscribe to Admiral Markets on YouTube, you'll see that upload. And he was saying that end of the 30s, 1930s, the rate hike was increased too fast. So I think that's the dilemma. Does the Fed increase it now with the risk maybe of being too soon? I mean, it's only a quarter, but there is a lot of global headwind at the moment concerning growth. So that is a bit of a worry. I think if it's too early, if it's too late, perhaps too much inflation in the future. So it's those two things that is difficult to balance. Today, we have unemployment rate and claimant count change on the pound. That's a big one. Inflation rate on the US, that could be interesting as well. Let's see. Beverly, I see your comment now. I think that's probably already solved, right, at the moment. So let's take a look at the charts now, or in fact, let's take a quick look at the heat map as well. Heat map is great. It's part of the analytics here. Just to get an idea, pound New Zealand, big mover, a lot of distance as well. So we can take a look at those euro and pound and Aussie crosses. I know that I wasn't a big fan of them yesterday, but they did move a lot apparently. But I wasn't that much, didn't see much space for swing trade really, considering the FMOC, but they did move a lot. Pound yen, pound CAD, let's see, euro yen, Swiss yen. What is this? Pound USD. Alrighty. A lot of pounds, as you can see. And pound indeed one of the bigger movers here. New Zealand second. Aussie third. Swiss and CAD not so much. Dollar also slow, relatively. Probably because of the FMOC. Alright, well that gives us some information. That's interesting. Let's head over to the charts here. Now I wanted to look at Camarilla in combination with moving averages. I've done that in the past quite frequently, so perhaps most likely you've already actually seen a webinar with me doing that. If not, let me know. Could be useful for me to know that there are some people that are seeing this for the first time. But the Camarilla and moving averages are, in my opinion, a good combination. I actually was talking about it yesterday in a webinar, part of the website Nennet and I run, elitecurrency.com. We have a FX training festival, and part of that festival, we were talking about Camarilla yesterday, but my sound was horrible. So I thought I will redo my part today. That is maybe so useful for those that maybe tried to join yesterday but didn't hear me. So I was talking about combining Camarilla and moving averages. Camarilla, first of all, is a pivot point indicator. And it's a bit different than normal pivot points. It basically gives intraday resistance and support levels. H3 and L3 basically are the range levels. If price is between them and it opens between them, this red dotted line is where the market opens basically. Right? I mean, from this broker perspective, each broker has their own time frames, but this is when it opens, and you can see that the H3 opens between H3 and L3, so it starts in a range-bound environment, and as long as it stays in between those, that's the range territory of the day. Now, as soon as it breaks above H3 or below L3, we're getting into a breakout territory / trending territory. H3 and L3, therefore, are kind of break or bounce spots. They're decision levels. Either the market could stop there and then reverse back, or it could break. And I use the moving averages to determine which of the two seems more likely. If it does bounce at H3, right, then there's a good chance that price will get to the other side, to the L3. If it bounces at L3, then it goes back to H3. Right, it stays in that range. Eventually, though, during the day, most times it will break the H3 or L3 at one point. And then the next target is H4 or the H5 or L4 or L5. If the market is in a bigger trend, let's say the market is in a big uptrend, then H5 would be the target. If the market is in a big downtrend, the L5 would be the target. If the breakout is counter the bigger trend, then typically you could see a stop at H4 or L4 instead. So I use basically the higher trend to determine whether the H4, H5 or L4, L5 is the target. If H5 is the target, then typically you will see maybe in pause at H4, a pullback and continue. The same for L3. If L5 is the target, you'll typically see the break pullback continuation like this. So that is when the trend, the bigger trend, is in that same direction. If not, then in fact this could happen. Something like what happened here. In fact, up and then maybe down again, down and then maybe up again, because there is not the bigger trend is not supporting it. Now, I use moving averages in combination with Camarilla. Nennet is actually uses it in a different way. but that's better. Best that he explains that. I use moving averages in combination with that because I want to assess what the trend is, and I use these two sets of moving averages, long-term and short-term here, to assess what the trend is. Now you can see the break of H3 was already disputable from that point of view. Why? Because the short was below the long, and price was actually running into the long term. And for me, that long-term moving averages are very important. They are key support or resistance. Very essential, in fact, in my analysis. So would I take a long right into them? No. I might take the long if it just breaks above the short term as a reversal trade to the long, fine. Right. From a Camarilla point of view, that would be in the middle of nowhere, so there's no synergy here or confluence. But in theory, on a higher time frame, like an hourly chart, I have no problem with that. On a lower time frame, that might not be enough to break above the band. I would like to have more confluence on average. Now, when they're aligned to the downside here, right, you can see that obviously the better breakout will be below L3. And then the target will be L5. Why? Because we're in a downtrend at the moment. We've been looking at the 15-minute moving averages. The upside, H4 is resistance because it's in a downtrend. And I might even look for shorts if it gets to H4. And I would use it actually as a reversal trade. So depending on how the moving averages are aligned, I will use these key support and resistance levels in a different fashion, basically. If they're intertwined, because sometimes they're not nicely aligned like this, but sometimes you have price like this, then actually it's a typical area or zone where I would expect price to bounce at H3 or L3 and not break, or I would not trade the break because the moving averages are intertwined. So when they're intertwined like that, when they're on top of each other and price is kind of like oscillating back and forth, that means there's no trend, there's a range. So if it hits H3 or L3, it's getting into an extreme, and there's a better chance that there will be a bounce. All right, so that's how I use the indicators there with the moving averages and Camarilla. Now, if at any point you find these two interesting, send me an email. Let me see if I can Chris_Sworcik, my name, at hotmail.com, and I'll send you these two indicators if you're interested in that, okay? The moving averages I use are exceptional EMAs. I use 21 EMA close, high and low, 21 EMA high, low, and 21 EMA high, low, and close. And long term is 144 EMA close and 169 EMA close. Let me write that down for you. But it's a special moving average, as you can see, because it changes, the color changes depending on the angle, if it's bullish or bearish. I use them for intraday, the Camarilla, but you could use them for daily if you, for daily charts or weekly charts if you move up the time frame. But I use them for intraday. So with that said, I just realized actually beforehand, I was a bit too late, that I can use a historical Camarilla to give you some past examples on the Eurodollar, and then we'll dive into, we can dive into live market now maybe, do that then, the historical. The historical Camarilla is a different indicator. It shows what the Camarilla levels were not only today, but in the past, which is useful because then you can do a bit of back testing. So I realized that we can do that actually now, but I didn't have it prepared. So let me, in the meantime, try to prepare that. Let me take a look at the Eurodollar 1 hour chart, and we'll take a look at pound and dollar yen in a second as well. In general, if I look at the majors at the moment, sorry, I don't see. They seem to be all kind of in the middle of a range. I think the Aussie could be maybe interesting. I would like to take a look at the Aussie, the pound as well, the dollar yen. I would like to take a look at. Those are the things that I have on my mind at the moment. So we'll take a look at those in a second. The Eurodollar, as you can see, yesterday, let's take a look at yesterday, was ranging here, stayed between those H3s and L3s, eventually broke to the downside. And we talked about it yesterday that there could be that opportunity for price to hook back. Remember here, as it broke away from the moving averages, I said these moving averages are intertwined. There's a very high chance we're going to snap back to those moving averages because at this moment they're a center of gravity. That means that price will actually revert back to them rather than moving away from them when the moving averages are aligned like that. That indeed happened. But eventually we did move lower after a lot of mess here. And part of that, if we go back to the hourly, you can see that actually the 21 EMA band became resistance and we did make the move down to the 144. Kind of fill that space. That's what happened basically yesterday. Small downside move. We bounced off that long-term moving average, and now again we're using the 21 EMA band as resistance. So perhaps now we could start, pushing through these long-term moving averages. It's possible if price goes below the L3. I think we could have that breakout to the downside. I wouldn't expect a very far move because of FOMC tomorrow, though. So that's something I'm going to be very cautious of. If I put a fib on this upside, then price roughly stopping at the 38.2 fib or the 50 fib. If it breaks below the 50, what is the next target? The 61.8, in fact. So there's not a lot of space. If it breaks below the 61.8, then maybe this. I don't expect a huge kind of continuation on the Eurodollar. There could be some downside momentum. If obviously price breaks above this trend line again, the next break, the first one was the first push here. It's logical that we find resistance because of the 21 band now bearish, and the 50-minute chart also downtrend. It's making kind of a bear flag correction. So I'm not surprised we obviously see here a resistance spot, but if it does break the next time, that could be then a breakout actually to the upside and breaking this bull flag, in fact, to the upside. From a technical chart point of view, that's what I'm expecting. So I would say Eurodollar is kind of positioned in a neutral spot. It could break to the upside. It is aligned to the upside because the short term is still above the long term, as you can see. So the breakout to the upside, the next break here would certainly be with the trend. Everything is aligned on the hourly. But there is the potential also here to make a bigger reversal retracement and go down and retrace to deeper fibs like the 61.8 and 78.6 fib. So I would be open to both. It depends on where price really goes. I'll follow the price where it wants to. Depends if maybe other currency pairs could be more interesting. So L3 and H3 here very pivotal in a way, because as soon as L3 breaks or the H3 breaks the next time, that could be the breakout that I might be interested in. We'll take a look at the 4-hour chart. All right. Let's take a look at the pound dollar. Got a big momentum yesterday, and that was something we did talk about, the rejection at 154.50. Went up to 56, so that was a good one, based on multiple things, but one of these things was the trend line like that. And it did get rejected, made a very big move down, in fact, more than I expected. The price really going for hours and hours to the downside here. And this could be just part of basically more downside. We're getting a small little correction, small little bear flag. So from that point of view, we could see one more thrust and continuation lower, I think. We got the downtrend aligned here on the 4-hour chart. We got price basically below the moving averages bearishly aligned. There is space between the moving averages. So I think that everything is aligned here for more downside. Let me just check the daily. Here too, remember we talked about the snapback to the moving averages. And if it does now push below the moving averages, which it seems like it's doing, then this could be a good continuation to the downside. Alright. Now I do think that the pound USD probably needs a bit more retracement at the moment. Let's see, 4-hour chart, 1-hour chart. Let me do some counting here. 13. Well, it's already has reached the minimum size of a bear flag that I want to see. I wouldn't be surprised if we see maybe a bit more. We have the pound news. Probably the best just to let the pound news do its thing. The pound news could either let it spike up to the H3, which could still be a resistance spot, or it could actually let it spike down, depending on the news event. It's fully dependent on that news. And probably just will wait for the news event. I'm bearish, but we'll rather try to trade the bearishness after the news event, either if it brings price up or if it brings price lower than for the breakout. All right, let's say the news event lets it spike down like that. We wait for maybe a small correction to the L3, for instance, and look for a continuation trade. Or how about if the news event is bullish and we see the spike up and it hits stage 4 and then we see kind of like consolidation like that? That might be the clue for me. That once it stalls with the consolidation, that I would look for a short to trade the pullback. All right, dollar yen did move up. I lost the first trade on the dollar yen, but I won the second, and that's something why I always was also saying yesterday. It's very important to take smaller units of risk, and actually it's better to use a daily risk maximum, also a maximum per trade. I'm not saying, but let's say that you don't want to lose more than 3% in a day or 2.5% in a day, which is okay. Then you don't want to risk maybe 2% on the first trade, because then you don't have any space to fight back. You want to position yourself in a way that you can take multiple trades so that you can sustain and live through a drawdown even through the day, right? So that you can climb back and still end up break even or in positive territory, even if the first trades don't work out. I mean, you want to give yourself space. You don't want to put all the risk on the first trade, right? Or any trade, in fact. I mean, if you want to risk 2.5% a day at the max before you stop trading that day, then take 0.5% risk per trade, right? Because then you need 5 losing trades in a row. Well, that still can happen, but at least you have a fighting chance to come back after the first or second trade loss. Or if you really want to give yourself a lot of space, take 0.25% risk, because then you can have 10 losses in a row, which, well, can also happen, but a lot less again than 5 trades, right? And even if you have 5 losses in a row, that 6th could be a big win, and you're back at break even, and there's no problem, right? And especially if you have an intraday kind of approach, I would say that that's very important. So from that point of view, the first one was a loss, but the second one was a win, and I got back what I lost on the dollar yen. Unfortunately, the first one was a loss, that's a pity, but that can happen. It just edged a bit lower. Maybe my stop loss was a bit too tight, but it went 15 pips below its bottom. What can you do? Took the entry again somewhere in here, I believe, and indeed made the reversal that I was expecting. Back to those moving averages as well, and back to the top of the range, and back to the top of this resistance trend line. Right, so that actually went a lot further than my target. Went up to 120.40. I was targeting 120. Was a bit, actually, in retrospect, maybe too conservative, but that's okay. Still got some 40 pips there to the upside, but lost, I think, actually less, maybe 25. All right, so now, what now? Let's take a look at Camarilla as well. Let's see, I got some questions here. Yes, I did catch the move up indeed. I took $2 yens, in fact. I took 2 euro yens as well, in fact. Also, the first one was a loss, and the second one was a win. Same thing, in fact. Now, don't get me wrong, some might think that's revenge trading or over trading. And to a certain degree, that could be possible. In my case, I wouldn't say so because there were clear reasons why I was taking those. And I was not, and by any near means, over risking. So that's okay. As long as you have clear parameters within the day, what you want to lose, and you stick within that, doesn't matter how many trades you take. Some traders are asking, what is overtrading? Overtrading is either because you're emotionally just taking trades without a reason, just emotionally, based on the emotions. I mean, based on the fact that basically revenge trading, right? In a way, like kind of just trying to get that money back in a very uncontrolled manner, and over risking. In fact, if a trader wants to take 10, 15 trades a day, as long as there's a clear plan and a clear kind of method and a clear max of risk, and that you chop those units of risk per trade in a way that you can live through a bit of a drawdown. So we'll talk about the euro yen in a second. Okay, anyhow, dollar yen. So made a revert back, and it's a bit still in a resistance zone. In fact, I would still be looking short as it comes higher here. But we did have engulfing 1 hour twins. Moving averages are intertwined here. So I think if it gets up to the H3, it's still a resistance zone. Moving averages are aligned. On the hourly, let's take a look at 15.2 in a way. So I think it's more heading into resistance. So I would be looking for shorts personally. Now, I don't want to necessarily totally neglect this trend line. If it does break that trend line, the reversal could be just small. If it hits H3, right, the only thing it could do is maybe go back to the trend line and bounce again. That's certainly possible. I don't want to dismiss that. So the take profit could be very limited because that could happen. Breakout, pullback, continue. And then the red part could be just a small trade there. We got this trend line too. So if it breaks below L3, it could be a breakout trade to retest that trend line, stay within this triangle. But price action point of view, forget the moving averages, forget the trend lines. Price action is at this moment bullish. So I wouldn't take a short just because there's a trend line, just because the moving averages are aligned. The price action, the candles are showing bullishness. So unless I see an hourly, unless I see price at H3 or some kind of exhaustion in the candles here, I would be still waiting, as you can see. Either an hourly candle or 6 5-minute candles not breaking the top. At this moment, I'm just looking purely at this engulfing twin here, basically. It's a pretty sizable candle versus the smaller downside candles. Basically, this one bullish engulfing candle is engulfing 4 bearish candles. That's a pretty sizable kind of price action. Considering also the bullishness prior to that, which was a pretty strong move, plus this eating up 4 candles, those 2 factors are saying to me that I would be cautious with just shorting like that at this point. As Ned also says, the first reaction and resistance always more reliable, and this is the second. So a bit more cautiousness. Yeah, Caitlin has an interesting comment, funny comment, engulfing quadruplets. We just created a new candlestick pattern. So the moving averages are intertwined, so I do think that the price will be limited in its breakout potential. Therefore, I'm interested in shorting if it breaks to the upside. Actually, from that point of view, the breakout down could be hazardous because the moving averages are aligned. So all it could do is maybe go to the L4 and we could see already a bounce back, in fact. So I think the potential here is, the other way around. As it breaks up or down, it seems to be more of a bounce territory than anything. All right, that's just my view. Who knows? We could break out for 200 pips, but unless these moving averages start to pull apart, I'm not that interested in that, in trying to catch that. The AUD/USD. Yeah, I didn't trade this, but I did say yesterday that I would be looking for the head and shoulders pattern, right? But I didn't trade it. It lost my vision in a way, and it was already midnight here throughout my night, so that took a bit too long to develop. Now, eventually, we did have a pretty good price action signal right here. You see this 1 hour bearish candle, which would certainly give the rise to think this, right? The occasion to think this. And it did move down a bit, but ultimately then bounced up the 21 band to continue up. So it didn't really get that big a reversal. Those things can happen. It already was an uptrend on the hourly. So this is pushing a bit further than expected. Still using the 4-hour 21 band, as you can see here. It went from the short-term 21 up to the 144, made and filled that gap there. But still pushing up and up and up, and that can happen. So from this point of view, I would like to break below the 21 or this trend line for breakout to the downside. At this moment, despite the bullishness, I don't see any reason to go long because it's right at the top. So no reason to go long. No reason to go long unless that breaks, perhaps. I would like to see actually a retracement, to be honest, before taking a long. Actually, at this moment, it's probably more of a bouncing spot than anything with that top still in play. But there's a strong 1 hour candle, so probably the best is neutral on this Aussie at the moment. So let's take a look at some. Pound USD is pushing out. Oh wait, that's the news event. Yeah, if without the news event, I mean, it could be a good short, to be honest, right now, just because of the bear flag break. But the news event would rather wait a bit. Eurodollar is getting to the L3 here, and it would be nice to see a bit of a mini bounce and then continue. Those are my preferred kind of setups there. All right, let's take a look at the Euro Yen. In the meantime, there's some comments, which is great. Let's see. we can take a look at the pound out. Definitely, Beverly. If there's something on the audio which we just discussed as well, let me know. I'm not sure. You can maybe tell me a bit more about those trade details if you want to, right? Then I can comment on that. Let's see. Beverly risks 1% and never runs more than 7 trades at a time, usually 5. Is that a good risk management plan? Well, it's on the, I would consider it a bit on the higher risk side, to be honest, because if you have 5 trades open, that means that you could be risking 5% at one time. And I'm not sure how much is your risk per day? What, of course, each trade is individual, so, but it's still open at the same time. I was talking about like having trades in sequence, which is still a bit different, I think, because if you have one trade open and you close it and you open a new trade, it's a bit different than having 5 trades open at the same time, I think. It's there's nothing wrong with it. It's just a bit on in the higher risk category, I would say, because 5% at open at one time is is a decent amount. Oh, but you said not more than 7, so yeah, that's 7% already. That's on the high side, I think. But I mean, this is something that would require a bit more discussion as well. If you want to, just send me an email, and I would gladly go through it with you together through email. Okay. When you say bullish candles, okay, that's something I already discussed. Let's see. Ah, 71.50. I'll just short 71.50. No, it's not doing well. It's because it's fighting forward, getting higher indeed, and the engulfing, not sorry, the head and shoulders are not really working out at all. In fact, that can happen. Somehow the trend here very sturdy to the upside. Bit surprising. But that can happen with reversal trades. I think that at this point there's a decent chance it can get back to the moving averages, but that could easily be a bouncing spot again for upside. So I do think that I'm not sure where your stop loss is, but probably at this point in time, considering the uptrend and the bullish price action, I would, if I were you, try to get out for break even probably, or maybe a small profit, maybe aim for 71.35 or 30. But I would probably try to get out of that trade. I would not want to keep that short probably. I mean, it could revert from this spot. It's possible, but the head and shoulders did not play out. And there is a pretty good bullish candle last hour. So any pullback that happens, I would use as an opportunity to get out of that trade at break even or a small profit, personally. Ah, thank you, Luigi. Oh, Pierre. Appreciate that. Well, sometimes shorting at a trend line just like that there's nothing wrong with that. I mean, in the long run, there's probably going to be an edge depending on how you, of course, approach that in real life. I mean, everyone has different approach to trend lines, but if you do good trend lines, then that will probably be an edge. But I just like indeed the moving averages because it gives me a bit more feeling about when trend lines are good to take or not. And it has to do with how they're positioned versus each other. If the trend lines, if the moving averages are loose from each other, trend line breaks are more interesting. If the moving averages are aligned, like on top of each other, trend line breaks are less interesting, and trend line bounces are more kind of probable, or false breaks. That's my kind of rule of thumb. That's why. Alrighty. Cool. So yeah, I think no, it doesn't look good. I think I would definitely get out of that LT indeed. Well, it's good that you don't open them at once, Beverly. Indeed, that's a good thing. Personally, I probably would have less trades open at once. What I do is typically 2 trades open, 3 trades. I wouldn't go up to 7 personally. Probably would just trade. Well, it depends. I mean, it depends on somebody's strategies you're trading and the risk per trade. But if you do have so many, maybe less risk could be good. I don't want to. If things are working for you, then again, uh, why not keep a winning approach, right? There's nothing wrong with that. It's just that sometimes, of course, things they go well, and then all of a sudden things can turn around, and if the risk is a bit on the higher side, it can go quickly. That's kind of what I want to worry for. Yeah, you have to be able to accept the loss. So if the loss is upsetting, then that's probably a sign that it could be on the too high side maybe, or at least on the higher side. Might want to think about something that could keep you. I don't know. I'm not sure how many times. I'm not sure how many times when you hit the max, or how many times you hit the max, in fact, and you have to stop for the day. I mean, you want to preferably get into a situation where that does not happen too many times. Preferably that you stay in the trading game throughout the day, and you just can take those opportunities. Because if you have to stop for the trading day or week, depending on what time frames you're using, then you're limiting yourself, of course. So it's better to stay in the game. Okay, it's not often. That's good. That's an important sign as well. So. Alrighty. Pound odd. Let's take a look. Yeah, sorry about that, folks. Connection got lost there, which is something that I'll definitely be working on soon to get a cable directly to the PC, because last few weeks it's been really happening too often, in fact. Before that, really hardly happened, but the last few weeks, somehow the connection is not as reliable. So I will get that cable soon, and that should solve the issue here with the connection sometimes losing out. Sorry about that. You should be able to hear me, right? Okay, cool. Great. Yeah, so pound out, let's see. 21,450. Yeah, that looks a bit risky too because we got a downtrend, right? I'm not sure, maybe there are good reasons for a reversal trade here. Let's see. But looking at this 1 hour chart, we can see, of course, some risky factors. Also, the fact that the 1 hour candle is just blasting through those fractals, pretty good, strong candle there. And that would really show a likelihood of more downside. Same like the audio is I would think, even actually a bit, perhaps even a bit more Aussie bullish at this moment. So that does look a bit scary. I think that probably you're close to hitting the stop loss already, in fact. So there's probably not much chance to get out of that trade at the moment. Just a few more pips, I think. Yeah. Sorry about that. That's annoying indeed. Let's see. It was old resistance on daily. Yes. And support here indeed. What's happening probably on the daily now at this moment is there's a chance of a 1, 2, 3 kind of here. It was definitely an uptrend though, right? Considering the moving averages and the bottom here. But what could be happening now is a bigger correction, maybe down to this. Here we had a lower high. Now, there are plenty of good reasons to think about longs though, from that point of view, at the level you mentioned. But indeed, at this moment, it looks like we're actually breaking the long-term moving averages, which are, the long-term moving averages are kind of like a bounce or break spot, and it didn't bounce, but it's now actually breaking below them instead. Those things can happen. I mean, you had good reasons, and that's just part of trading. Sometimes we're just going to bump into losses, and perfect analysis doesn't exist, and will not avoid that. So there's nothing wrong with that. There was a bit of a bounce on the hourly chart. It just unfortunately didn't make this, but continued. What can we do? There was divergence between these bottoms, so it made a lot of sense. And at one point, we are going to see a move back to the 21 band, because now the bands are intertwined. What does that mean? That they're going to be acting as a magnet. So eventually, after it probably goes down a bit lower, it's going to revert back to the 21 band and most likely then continue with the downtrend that is now established. Something like this will probably happen. Most interesting trade is probably here to the downside. Now, yesterday, I'm not sure what I was talking about yesterday. I think I had some kind of channel like this on, probably. And now with the break below this rough channel, I probably turning more bearish, as you can see. So something like that seems to be a potential setup for next week, probably, because tomorrow FOMC, I wouldn't be want to trade any swings, and Friday is not a good day to open swings, swing trades either. So that would probably be more something for next week. Guitar. Can you imagine this? The second time I lost connection. All right, folks, I'm back again. Let's take a look at the odd yen. There it is. All right, this is the odd yen. We can add the Camarilla as well. Alrighty, the odd yen. Odd is strengthening. Yen is at resistance, the dollar yen at least. If the dollar yen does move down off that trend line, we could see some yen strength kick in, which could pull it down. But the Aussie is also strengthening. If the dollar yen breaks to the upside, the odd yen could continue higher. I wouldn't think that the odd yen downside is something that will happen soon. It looks pretty bullish. If you look at the hourly chart, got an uptrend here, 4-hour chart, and we got 21 band. We are getting close to the long-term moving average, that's true. But at this moment, I would be cautious with shorts. It looks too much of a bullish environment at the moment. Considering the candles, considering moving averages, price action. Let me take a look at the dollar yen as well. Again, dollar yen seems to be getting maybe some rejection. We have to wait 20 more minutes to see how this hourly candle closes. I think the dollar yen is certainly going to run into resistance. But the question is here, or will it happen closer to 60, 70 level? Both are really possible. So I'm kind of curious whether it will happen here or here. But both have the potential for a resistance spot. Let's see. Let's take a look at the 500 candles now. The third, this is the fourth candle. Back at the 21 band, which could be a bouncing spot. So Pierre, your short is the moment doing okay, as you can see. So nice job. I hope it. I hope it continues here. I think the hourly candle will be an interesting signal for that. So back to the odd yen. Yeah, the yen could have a turnaround, but the Aussie still looks like it will push. So from that point of view, eventually there could be maybe some retracement, but a good chance of follow through. For the odd yen, I'm trying to, let's see what the bigger retracement level could be. We hit the minus 272 target. The next bigger target could be the minus 61.8 target. Maybe 87.25. That's how far it could go. So it's definitely getting into a zone that it could turn around, but It doesn't have to be right now. It could be a lot higher. Alrighty. Yikes, that's annoying, Pierre. The 3-4 days is not good. That's way too fast indeed. Maybe it would be good also to have a few emails perhaps about that risk side of things too. I mean, I definitely try to help if you're interested. Very important indeed that something like that, drawdown of a few bad days doesn't eat away too much. Let's talk after the webinar, okay? All right. So we talked about some pairs here. Let me quickly go back to see what's going on with the euro, bouncing off the L3, pound, around the bottom, dollar yen, we already talked about. Let's see, Aussie. Aussie's breaking, didn't even make the retrace. Yeah, it could still make the retrace now, in fact, down to about that 71.40. Not sure where the stop loss is. Let me, dollar CAD is still in a triangle, doing nothing. Euro pound, talked about it yesterday, the chance that it could bounce off 38.2 fib. It did. Double bottom here, look at that. Maybe one more upside. No, wait. Something's wrong here. Yeah, no. Indeed, double bottom, we made it upside. So it didn't make that break to the downside. But now it's still facing resistance. Let me actually pull up the historical Camarilla indicator. Okay, we can take a look at Camarilla and how it acts on the Eurodollar, for instance, multiple days. A little bit easier. I just didn't have that indicator yet on MetaTrader 4, so let me reboot that quickly. In the meantime, I'll show you the technical analysis that you can find on Admiral Markets website. Well, that does not seem to be appearing, so I will just go back to this. Seems like things are a bit slow at the moment. Not sure why. Platform is not opening somehow. Well, that kind of disturbs my plan. So I think I'll probably have to call it a day then in this case. I don't want to keep you waiting for forever here. We can do that next week. We can. The historical Camarilla is on the platform now, so next time we can take a look at that and take a look at how Camarilla responds with the moving averages. That's what I wanted to do, looking back at several, maybe several weeks or several days at least into the past, because that's the advantage of historical Camarilla. Not only does it show the levels of today, but also the levels of the past, which is useful for getting a bit better idea what's going on with the strategy. A bit more testing possibilities. So we can do that next week. I would like to check the pairs indeed, but at the moment the platform is not restarting. I'll probably reboot the computer at the moment to get that going again. But that would mean that the webinar will be ended. So we'll do that next week, maybe even on Tuesday or Wednesday. Sorry about that, BT. I would like to do that too, but somehow it's just not starting. So from that point of view, if you remind me, BT, next week, I'm not sure if you will remember as well, but I'll try my best to remember too. And we can take a look at both the Euro Pound and the historical Camarilla. And wish you good trading. I hope to see you in tonight's webinar with Nennet and tomorrow's webinar as well with Nennet and myself. And tomorrow, I think we're going to take a look at, let's see, I forgot the topic of this week, in fact. Net is going to take a look at price action, that's for sure. And together, we're going to take a look. Let me quickly take a look. Oh yeah, tackling drawdowns and risk. Well, that's perfect actually combination for tomorrow, isn't it? We already talked about it today a bit. By coincidence, I didn't realize it, but tomorrow Nennet and I are going to take a look at tackling drawdowns and risk, so that could be a good topic for tomorrow. I hope to see you then and wish you good trading. Cheers.